Hello everyone, great to have your company here on Kalkine TV. I'm Rose Jacobs and you're watching Buzzing Trends. Today we'll be looking at three ASX Media stocks offering over 5% dividend yield. Media companies have often been on investors' radars in recent years, especially as digitisation has vastly increased their reach. The onset of the COVID-19 pandemic has also worked as a catalyst for media companies, as the screen time of customers during the pandemic has seen a massive jump. Companies with a strong foothold are expanding their reach via increasing their online presence, giving them a competitive advantage over businesses heavily reliant on older media platforms. Also, dividend-paying media companies are more preferred by investors with the obvious reason of a regular dividend income. Looking at three ASX dividend-paying media companies trading at a dividend yield of over 5% now. First up, NEC Group, formerly known as Photon Group, is a New South Wales-based media business. The company has an international network of the communications business in 13 cities across the world, with an employee strength of over 600. NEC Group has a market capitalisation of $330.1 million and has been clocking up an uptrend in revenues for the past few years. In financial year 21, the company garnered a net revenue of Australian $402.48 million, while in financial year 20 it recorded $268.74 million. EGG shares have taken a hit this year, falling 7.86% on a year-to-year basis. The company's shares are currently trading at $3.91. However, the last one-year return stands at a decent 28.57%. NEC Group shares are trading at a dividend yield of 5.7% and declared a total of $0.149 per share in calendar year 21. Next, one of the prominent media companies in Australia, Nine Entertainment, is into radio and television as well as the newspaper publication business. It has a market capitalisation of $4.77 billion and competes with peers such as Seven West Media, HT&E and more. In financial year 21, the company's revenue soared to $2.33 billion from $2.16 billion in financial year 20 and $1.85 billion in financial year 19. The year-to-date return of Nine Entertainment shares is a negative 3.73% to its current price of $2.84. The stock is trading at a dividend yield of 5.4% and declared a total of $0.060 of dividend per share in calendar year 21. And lastly, UMedia is a Sydney-based Australian advertising company and is one of the largest operators of out-of-home advertising products. The company's vast reach helps advertisers to penetrate 77% of all metro and regional Australians. The company has a market capitalisation of $990.7 million and its revenue too hit $426.53 million in financial year 20, compared with $649.61 million in financial year 19. UMedia shares are slightly down in 2022, falling 0.17% to its current price of $1.72. At the current price, UMedia shares are trading at a dividend yield of 5.3%. And in conclusion, while investing in media companies, the digital presence of the media business, which in today's world is imperative to reach a wider audience, also dividend yield is a good valuation metric for any business. However, it should not be the sole consideration before investing. Other parameters such as the quality of management, stability in revenue and more should also be considered. And that's it for now. We'll be back soon with our Buzzing Trends show to share the latest market insights with you. But till then, stay tuned with Kalkine TV for more stock, business and economy related hot trends. I'm Rose Jacobs. Thanks for joining me.